Hello friends, are you planning to borrow money in the form of loan sooner or down the road? A CIBIL score or a credit score plays a very crucial role in the loan approval process. But what does it mean exactly? So let's see what the CIBIL score is.
A CIBIL score is a three-digit number given by the Credit Information Bureau Limited, a credit rating agency authorized by the Reserve Bank of India. CIBIL score and credit reports are offered to individuals as well as to banks and non-banking financial companies. This number ranges from 300 to 900 and is based on a person's credit history. It is basically a way to ascertain a person's ability to pay back the amount they intended to borrow. CIBIL score is taken into account by banks and financial institutions before making a decision on disbursing loans and issuing credit cards. A person's past records of borrowing and repaying habits, as shared by the banks and lenders with CIBIL and credit bureaus on a regular basis, mainly decides the scores. Remember, the credit rating bureau was access to all the credit information, that is all financial transactions where a person may have borrowed or repaid loan. Now let's see what the CIBIL report is. Lenders consider both the CIBIL score and the CIBIL report to decide whether a person is eligible for a loan. CIBIL report is an overall credit report which includes a person's credit summary, personal information, contacts and employment information as well as the loan account details. A CIBIL score is mainly arrived upon after evaluating the credit history found in the CIBIL report.
This report is nothing but the Credit Information Report or CIR. Simply put, a CIR is a person's credit payment history for various loans from credit institutions over a period of time. It, however, doesn't have details of saving, investments or fixed deposits. Now, why the CIBIL score or a credit score is important? Because it ensures a quicker loan application and documentation process. It also translates into lower interest rates on the loan in addition to higher quantum of loan with longer or no flexible repayment tenure. It also provides a borrowers with a choice between multiple lenders to help take out the loan of your choice. Now, what is considered to be a good CIBIL score? A higher credit score gives a borrowers the ability to negotiate on the terms of a loan. For example, such borrowers can get the lowest possible interest rates on a personal loans as well as a longer tenure or higher loan amounts, etc. Now, score between 700 to 750. This score is considered to be a good score and the person has a good chance of securing the loans on favorable terms. However, lenders may choose to offer slightly higher rates of interest for such applicants. Score between 650 to 699. This score is considered as an average score and lender may sanction the loan by asking for an additional guarantee like a guarantor or co-applicant. Score between 600 to 649. This score is considered to be a bad and indicate constant defaults on a loan repayment or a credit card bills. The chances of getting a loan are slim. Score below 599. This score is considered to be a poor and indicates poor credit health and the lenders may refuse to advance a loan. Now we will see how the credit score is calculated. There are many websites which provides your credit report, but there are three major credit reporting agencies in US, and that is Equifax, Experian and TransUnion. They report, update and store consumers' credit histories. While there can be different in the information collected by the three credit bureaus. 5 main factors are evaluated when calculating a credit score, and that is first one is payment history, that is 35%. Second, amount owed 30%. Third, length of credit history 15%. Fourth, types of credit 10%. And fifth, new credit, that is 10%. Now let's see these points in detail. First, payment history. Your payment history includes whether you have paid your bills on time. It takes into account how many late payments you have had and how late they were. Second, amount owed. Amount owed is a percentage of a credit you have used to compare to the credit available to you, which is known as a credit utilization. Third, length of credit history. Longer credit histories are considered less risky as there is more data to determine payment history. Fourth point is credit remix. A variety of credit types shows lender you can manage various types of credit. It can include installment credit such as car loans or mortgage loans and revolving credit such as credit cards. Fifth point, new credit. Lenders view new credit as a potential sign you may be desperate for credit. Too many recent applications for credit can negatively affect your credit score. Now the question is how to improve a CIBIL score. Here are 5 simple ways that prospective borrowers can use to improve their CIBIL score. First is check and monitor the CIBIL score at regular intervals to get an idea about the credit status. Second, limit credit cards usage and make sure you are not exhausting your limit. Try not to spend over 50% of your credit card limit until your CIBIL score touches 750. Third point, make sure to pay all dues on time and avoid delays to maintain a good credit. Fourth, it's advisable not to have a large amount of unsecured credit like multiple personal loans. Fifth, getting in rejections for multiple applications of unsecured loans also reduces chances of getting a good score. So these all are about credit score and credit reports. If you like the video, then subscribe the channel for more such knowledgeable videos.